Here now, Manhattan Institute adjunct fellow Stephen Miran. And Stephen, you penned a great piece here recently. The Fed's monetary handover, the stealth politicalization of monetary policy poses inflation risk. The whole sentence went completely over my head, but I said I got to get this guy on because anytime we start talking about politicalization of monetary policy, I think the audience needs to learn more.
So thanks so much for having me. But, you know, sort of the short and simple of it is that through years of unorthodox monetary policy, trying to be very creative in the pre-COVID period when interest rates were stuck at the zero lower bound, the Federal Reserve started purchasing longer-term bonds, right? But if the Federal Reserve is purchasing longer-term bonds to take them out of circulation, that means that Treasury, on its part, can also alter the number of longer-term bonds that are out there circulating in the market.
Right.
And so if the Fed can change that to adjust monetary policy, it turns out that Treasury can also. And Treasury has been of late. Yeah,
and that's how we started this segment, and everyone's kind of waiting this next round of, for the next quarter what the Treasury wants to raise. And they got a little creative last time saying we'll do less notes and bonds and more bills. And I think the market breathed a sort of a sigh of relief, but you can't breathe a sigh of relief forever, right? I mean, it's a $34 trillion in debt. It keeps going up. And to your point, it goes up the more the Fed buys. And soon, listen, it's only a matter of time, before we get back to quantitative easing, isn't it?
Well, I don't know if we're getting back to quantitative easing soon, but for sure it seems like the Treasury has mimicked some of those effects in the market of late. So if you think about the amount of issuance that Treasury has done in Q4 and that it expects to do through the course of Q1, the total is about $1.6 trillion of net new issuance because of the huge deficits we're running, right?
Right.
It's been issuing about 40% of that in coupon debt, meaning maturities longer than a year, right? Normally it would be issuing about 80%, right? So if you went from 40% to 80%, that would be another approximately $650 billion of coupon debt out there in circulation, which, by the way, is similar to a QE type program that the Fed would have been engaging in a decade ago. So in the last 2 quarters, the Fed has already essentially mimicked the Treasury has already essentially mimicked the effects of a QE program from the Fed, which has been one of the main drivers in the quite substantial decline in interest rates.
So, the Fed, they've got all the PhDs in the world work there. You would think they would see this, but also, though, we saw with this emergency banking program where banks borrowed money from the Fed at, let's say, 4 3/4, went around to the other part of the building and deposited it at the Fed for 5%. So how does an organization like the Federal Reserve, which has more power than any entity on the planet, how it feels like they're being played to a certain degree by the federal government, and whatever their goals are, how can they reach them when we have a government that's insatiably spending, particularly in an election year?
Yeah, so that's a good question, and we'll see how things play out over the course of the year. For sure, there is an argument that inflation has come down a lot, and so if you keep policy the same when inflation's come down, you're implicitly tightening because real rates have gone up, and so there is an argument for adjustment cuts, which means lowering to keep pace with inflation. But adjustment cuts have essentially already been delivered by Treasury, as we were discussing a second ago. So if the Fed follows through with a fresh round of additional adjustment cuts on top of that, it runs the risk of providing a lot more stimulus than it needs to when labor markets are still tight,
right.
housing markets are still tight, and we get some resurgence in inflation.
So but the Fed themselves kind of moved off higher for longer.
Yeah.
Powell took a semi-victory lap. People think that the betting is that he'll take a even more definitive victory lap on Wednesday. Could this be the policy mistake that some fear? Some people who've been on the street for a long time worry more about the Fed than everyone else who's just kind of put on the pom-poms and gone up for the ride,
Yeah, so absolutely, I don't know whether he'll take a victory lap. I think there will be pressure for him to do so, and I don't envy the position they're in, because if you looked at the inflation data and you looked at the labor market and you looked at where real policy rates were, you absolutely would say, okay, yeah, with no knowledge of history, right? You absolutely would say, yeah, there's some scope for a lot of cuts. But then when you look at history and you look at the fact that we just lived through this horrendous inflation crisis, the scarring of that in people's psychology and firm psychology, consumer psychology is still fresh. And so the vulnerability to more inflation now is much greater than it was 4 or 5 years ago.
Right.
And so history matters, context matters, right. And the risk of over-delivering on accommodation, given very recent past, is very different than it would have been 4 or 5 years ago.
That is a fantastic point. Forget about the Arthur Burns situation. Because And we hear it all the time. On all the presidential polls, people are still talking about inflation. Not that the rate has slowed down, but they know that prices are significantly higher than they were just a few years ago. And I don't think you want to spook them anymore, to your point.
The rate's slowed down, but it depends how you look at it. So the Fed tends to target this PCE, personal consumption expenditures, but CPI inflation is running quite a bit higher than that. And just because the Fed targets PCE inflation doesn't mean that it's necessarily the right inflation number that people have in their minds, right? The Fed having chosen that, that doesn't mean that there aren't, that there aren't other inflation data that are more worrisome.
Yeah, maybe they should do a supermarket thing, like go to your local ShopRite and let's settle it there. Stephen, great stuff.
Thank you for having me.
Appreciate it. Great writing.